we trade this intraday technique. So first we have to start off with the daily chart. We are on the Axis Bank's daily chart. So I just have to clean my chart first so that I can see what is the structure. So now we are seeing that price made a fake breakout and price is at this resistance. The uptrend seems to now take a little bit halt. It is losing steam. That is what you can confer from the daily chart. You just draw areas, good areas of supports and resistances. Do not overdraw it, just draw important areas which are clearly visible as I have drawn. Then you go to the 75 minutes or the 60 minutes. In this you draw important areas if you can get, and you can also polish the areas which you have drawn from the daily. We are not using the weekly and the monthly time frame here. Just start off from the daily. Here I am seeing that this is a good area. Apply the 75 minutes template. Here also we see that price is sideways, nothing much conclusions. Trading between this range. Now you go to the 10 minutes chart, the trading time frame. When you go to the 10 minutes, again you see if there are any clear visible areas. Only good clear visible areas should be drawn and not the other areas. As of now I do not see any great areas. One is here, but it's okay. So I'll just apply the template now. Where are we? We are in the middle of the week, so I'll apply the intra levels live. On the 10 minutes we see a head and shoulders forming. Once you apply the template, you will see that your chart gets very shrinked. So you just double click on it, and then on the right hand this scale column, just drag it up so that you can see the chart. Right? There was this area here. Apply the 15 minutes template or the 10 minutes, you can create it by yourself now. So now what do you see? You see that there are many levels forming here, and we are also seeing a head and shoulders forming. So this level, this conflux of levels becomes important. If the price breaks down, we go short. Let's see the first candle of the day. Now always remember, you note this point down, that always start trading from the third candle itself. You have to ignore the first two candles. I mean, you do not have to start trading from the first two candles. You have to wait for 20 minutes and from the third candle you can trade. So this is the first candle, the second candle, and now it is not a clean breakdown, right? Now you already know how to analyze. So this is a doji candle, not a clean breakdown. We want a complete clean breakdown. Okay, this is a breakdown, but anyways the wick is sticking down. Again, that is a point of concern. One could take a short entry here, or you can also wait. This is not a great breakdown, right? Anyways, let's say that we decide to short now. Now how do we take this trade? Now first of all you need to check RSI. The RSI should not be below 20. It should not be below this line. We have already set this 2080 levels. So the RSI is fine, it is at 40. The next thing we need to do is see the ATR of the previous candle. This is the breakout candle. This is the breakdown candle, and this is the previous candle. We need to check the ATR here. What is the ATR? As you can see here, you can see where my mouse is. Just check the ATR. It is 1.9. So what is ATR? ATR is nothing but the average of the range. Range means the high and the low. What is the average of the range of the previous 14 candles? That is the ATR. So 1.9 means that in general, Axis Bank, each 10 minutes candle, the range is around 1.9 rupees. That is what ATR means. So that helps us to determine our stop loss. So 1.9 is the ATR. Now how do we enter? Let's see. We are going short, so we use this short position tool. Now this is the level which got broken down. Now you have to identify the center of this level. Both these lines, right? The center of both these lines is approximate here. So place this tool here. Now from the center of these levels, you have to place your stop loss at 1.9, that is the ATR. So you reduce this and this is the stop loss 1.9. Now the entry price is at the close of this candle. Now what about the target? What do you see on the next level? You see is here is a good level. You can see there is this rejection coming off from this level, or this is also a good level. Always set your target somewhat above the support or somewhat below the resistance in case of going long. In this case we are going short, so place your target somewhat above the level which you are planning. Let's say that we are planning this. The risk reward is 1.96. So now let's see, the trade is taken. And you see that the target got hit. So this is the basic premise of our intraday trading technique. I hope you understood. Basically we are trading the conflux of levels. Now we need at least two levels, at least a minimum of two levels to be broken down together. And the other condition is of those two levels, at least one should be the manual support resistance. In this case, this green line we have drawn it manually, right? So we want at least one manual support resistance and at least two total support resistance. If there are 3, 4, 5, then it is great. But at least two in total, and in that at least one should be the manual support resistance and not the automated hidden support resistance. Now let's understand the concept of trailing stop loss for intraday. The first rule is that never keep your targets open in intraday. Always have a fixed target in intraday because there is a time limitation. It makes no sense to keep your targets open for intraday because in the normal course, very few days are trending days where the price will keep going up and up. But generally, majority of the time, there will not be trending days. And it is not possible for us to catch those trending stocks again and again. So never keep your targets open. Always have a fixed target. In this case, we had a fixed target. Let's say that first we thought that this is a good target, right? You see there was a rejection here. But then we place a target here because there is also this level here, right? And this monthly hidden level, two levels are there. Now you see what is your risk reward ratio. Your risk reward ratio is 1.96. The first rule is never trade for a risk reward less than 1.3. That is the minimum risk reward which you have to attain. Now you have to start trailing your stop loss when the price hits 2R. What do you mean by 2R? Now here the risk is 2.45, right? Here the risk is 2.45. So 1R is 2.45, 2R is 4.9. So when the price hits 4.9, you trail your stop loss to 1R. In this case, it does not apply because the target was less than 2R. The target was 1.96R. So in this case, it will not apply. But if let's say that my target was this, let us assume just for the sake that this was my target 5R. Now what I will do is, when the price will first hit 2R, I will start trailing my stop loss when the price hits 2R. When my price will hit 2R, that is 2.5 multiplied by 2, that is 4.9. When the price will move 4.9 points in my favor, that is, let me mark this target first, that this is my target. Now when the price will move at 4.9 points here, when the price moves here, touches this point, that is 441, then I will trail my stop loss to 1R. What is 1R? 2.45 rupees, that is the risk amount. So I will trail my stop loss to this level. When the price hits 441, I will trail my stop loss to this 2.45. It is 2.5, but it's okay, at 443.6. Now after hitting 2R, that is 4.9, after falling by 4.9 points, that is here, it again goes to 3R now, that is 4.9 plus 2.45, that is 7.35. Once again, 2.45 is my stop loss point, multiplied by 3, so that is 3R, that is 7.35 points. So when the price hits 7.35 now, when the price hits 7.35, price hits 438.7, once again I will trail my stop loss to 2R now, right? So with each increasing R, I am trailing my stop loss to each increasing R. I hope you are getting. So first, when the price hit 2R, I trailed my stop loss to 1R. When the price hit 3R, I trailed my stop loss to 2R. When the price hits 4R, I trail my stop loss to 3R. The final condition is that when the price hits 90% of my target, I have to trail my stop loss at least at the cost. In this case, it will not apply because my target was here at 12.3 points at risk reward of 5. So I am already trailing my stop loss somewhere here at risk reward of 4. I have already trailed it, right? But in case your initial target is small, like this, the initial target which we had set here, initial target is less than 2, that is 1.9 risk reward. In that case, when the price makes 90% of your move, what is the 90% here? The target is 4.65 points, as you can see. So 4.65 into 90%, that is 4.2. So when the price moves 4.2 points from your entry, the entry price is 446 minus 4.2. That is when the price touches 441.8. That is somewhere here. As soon as the price hits 441.8, you trail your stop loss to cost. In this case, in our example, price did not come to 441.8 here. It came with this candle. With this candle, it came at 90% of the target. So when price hit this A point, we trailed our stop loss to this, and the next candle hit our target, fortunately, as our target was this. So the next candle immediately took the target. It is just to ensure that when the price has already made 90% of the move, we do not miss out we do not end up in losses if the price reverses from that. So we do not want to end up in losses. That is the whole idea. So when the price makes 90% of the move, always trail your stop loss to the cost for intraday. And the other system for high risk reward trades, risk reward of more than 2, let's say your target is this 4.4 risk reward ratio. In that case, for each increasing risk reward, right? For each increasing risk reward after 2, once 2R is achieved, you trail your stop loss to 1R. Then if the price moves to 3R, then trail your stop loss to 2R. If the price moves to 4R, trail your stop loss to 3R. In such fashion, you trail your stop loss. So this is the risk management model we will follow with this technique, and it works wonderfully well. In the coming examples also, I will focus on risk management, how to place targets and stop loss. So if you are confused with this video, do not worry. Watch out the next videos. Slowly and slowly things will get clear. I will give many examples to make you understand the technique.